Hello, this is Bruce Wan, Head of Research for MaxCap Group. In this video, I want to talk through our Australian market outlook for 2025. Specifically, how are the real estate market drivers shaping up? What are the key investment themes? And where do we see the best opportunities for the year ahead? A year ago, this outlook had a much more bearish tone. Concerns about rising interest rates, slowing growth, and falling asset values all dominated the headlines. In fact, the most popular industry mantra at the beginning of the year was survive until 2025. In that sense, I'm very glad that you're still with us. Looking into 2025, the outlook has certainly evolved for the better. Money markets are pricing in rate cuts, although the timing is being pushed out into the middle of the year. The outlook for growth is improving, even if we are still tracking slightly below trend pace. At the same time, there are more convincing signs of a real estate market turnaround as asset values rise for the first time this cycle in late 2024. Altogether, we are looking at a stronger Australian real estate market in 2025, albeit one that is facing very different challenges and driven by very different themes. Strong population growth continues to dominate the economic landscape, and while we do expect some moderation in migration inflows, with or without policy interventions, we are still looking at a sizable and relentless increase in housing demand. Housing construction remains at the top of our target list. Population growth is still outpacing housing supply by a large margin, driving a persistent state of housing undersupply for the foreseeable future. That pattern of demand is broadly distributed around the major capital cities, driving the need for more apartments in the city and more land subdivisions around the urban fringe. Meanwhile, the big structural impediments for the office and retail sectors are finally subsiding. Work-from-home arrangements are not presenting the same drag on office demand. If anything, office demand in Brisbane, Perth and Adelaide are running ahead of pre-COVID trends, while Sydney and Melbourne are slowly catching up. At the same time, the structural shift towards online shopping is running its course. As the gap between online and offline sales growth steadily converges, landlords are remixing their tenancies for this new retail landscape, and investors are gradually returning to the sector looking for value. From an investor perspective, there are several considerations to work through. For private real estate credit investors, lower rates may mean slightly lower returns. At the same time, lower rates also mean better borrower appetite and increased loan volumes. Altogether, commercial real estate debt is still a very good source of returns, one that is still very strong on capital preservation. For private real estate equity investors, 2025 is shaping up to be a much better vintage. Looking at this chart, we can see a lot of pretty colors showing the annualized investment returns across different years. The patches of red show the big historical downturns like the 1990s recession and the global financial crisis. What followed each time were patches of green when the rebounds in the economy and asset prices supported much better equity returns in the real estate market. In 2025, after a small patch of red with the Great Lockdown and the run-up in interest rates, the market is steadily moving into a recovery phase, and we are potentially looking at a much better vintage, another patch of green over the next few years. You can read more about this topic in our latest market outlook report. If you want to discuss the potential opportunities both on the equity and credit spaces, talk to us in the Capital team for more information. This has been Bruce Wan for MaxCap Group.